This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. Last week, we spoke with Greg Rumment of Centurion. Greg is one of the few people who I've had as a repeat guest on Make Better Wealth Decisions because of his unique situation in the Canadian environment. He's a CEO who manages a multi-billion-dollar private real estate portfolio with assets throughout North America. And he's got a great deal of research, having worked on Wall Street and in the financial services industry on the security side for many years prior to his current role at Centurion. Greg is one of the people who I believe gets it in terms of his out-of-the-box thinking and his understanding that the world is different and that we need more exposure to hard assets as the world moves toward a more dangerous place where the risks of inflation become a very real consideration. The simple fact of the matter is that we've had it really, really great as investors for over 40 years. With the peace dividend of the Berlin Wall coming down and the Soviet Union collapsing, with a long bull market in bonds, with interest rates being at extreme highs in the early 80s, going down to effectively zero a couple of years ago before they normalized, and with trade liberalization allowing for globalization to lower the cost of goods and services all around the world. All of those things have changed. We're now at a point where interest rates have gotten higher and are likely to stay higher for their foreseeable future, where there's a great deal of geopolitical instability, and where tariffs seem to be very much the sort of thing that will be on our radars and part of our lexicon for a number of years going forward. As a result, we investors need to rethink how we go about building our portfolios and managing risk going forward. There is no question that the world we are in is more dangerous, that the things that we had that were acting as tailwinds, pushing economies forward and pushing stock markets upward, are no longer going to be part of what we're dealing with. And we're now going to be dealing with headwinds, things that are going to be more challenging, things that are going to be making returns lower and risks higher. It's absolutely imperative that we as investors make better wealth decisions by thinking about these realities now, tangibly, and making changes as soon as possible, as long as they are consistent with their risk profile and our station in life. I'm not suggesting that people have to change their entire portfolio 100% from what they've been doing throughout their entire lives. I am, however, suggesting that they need to reconsider what they're doing and consider the extent to which tweaks might be in order. That might mean reducing the exposure to stocks. It might mean reducing the exposure to traditional bonds. It might mean moving from growth stocks to value stocks, or from North American stocks to European stocks. But it almost certainly involves putting more inflation hedges into your portfolio as well, things that do well in an inflationary environment. We've benefited from a more than 40-year bull run where everything in the world has been disinflationary, not deflationary, just disinflationary. Inflation has been going from the high teens to effectively zero over 40 years. And so if you think about it, if interest rates go down by 40 or 50 basis points, say a little under 0.5% per year, every year for more than 40 years, that's a great way to push things forward and to keep the economy growing and to keep inflation under control, because even as the economy was growing, inflation was coming down for 2 full generations. That's over. That's just not going to happen anymore. We're now in a world where inflation is going to be a fair bit higher, at least somewhat higher, I guess I should say. Interest rates are going to be what I'm going to call normalized. We're now at a point where rates went down to effectively zero from 2020 until 2022. They went up for a while in 2023. They stayed up, and now they've come down a little bit in late 24 and into early 2025. But we're now at a point where interest rates are not likely to move materially in either direction. They're going to be staying at more or less current levels. I'm not saying they're not going to move at all, but they're not going to move much for the next little while. And we have to get used to a world where interest rates are moderate, excessive, but moderate, certainly higher than they have been for most of the past 8 or 10 years, and not likely to come down anytime soon. And in fact, I believe as inflation becomes more of a concern, they might even start going up, which could actually cause bonds to lose money, something that happened in 2022 that many people had never ever experienced before, and really, in many instances, had never even contemplated happening before. That's just one example of the risks that we're now dealing with, where the world is becoming a little more dangerous, where valuations are stretched, and a lot of stocks are currently priced to perfection. You can't reasonably expect that to go on much longer. As a result, I think people should start lowering their expectations about long-term returns going forward and trying to find things that will get those maybe somewhat lower returns while also getting lower volatility going forward so that they can have the focus and discipline to stay invested and get to where they need to go as they reach their retirement goals. Making better wealth decisions involves looking at things as they are, not as they once were, not as we want them to be, but as they actually are, to be realistic about what's going on, and to make meaningful, targeted adjustments to the portfolio so that we are better able to deal with whatever might be coming down the road. This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.